Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about United Wholesale Mortgage. Now in this video we're going to dive towards the update due diligence and as well an update towards my position that I'm currently holding. Now I did make a video about this one. If you would like to watch it, it was back in August. It's in the description below. But if you've never watched a UWMC video or haven't heard about UWMC in a while and need a refresher, United Wholesale Mortgage is basically focusing on wholesale mortgages. So they work on two main folds of technology or objectives. So to make mortgage processors better for brokers, partners, and to help them deliver an unparalleled experience to their borrowers. So they do have around 20% market share and counting, and it's been the #1 wholesale lender in the country for 6 consecutive years now. Now there is some updates that I do want to take a look at. So for the third quarter 2021, we're able to see, yes, they have higher origination volume compared to others in the industry like Rocket. Rocket didn't really beat first quarter 2021 origination, but UWMC was one of the only that met basically an improvement quarter per quarter. Now, origination volumes from first quarter 2021 compared to the third quarter 2021, you're only seeing around 3 companies, UWFC, which had 0.2%, JPM, which had 5.9%, and UWMC, which had 28.3%. And we're seeing a really nice jump here. Rocket has 15% decline. Now, origination volumes, we're able to see that in 2021, it was the highest. It's a record, but I'm giving you the bullish things and I'm going to go critical in a minute. So UWM gains on sale margins based on BPS. So we're able to see in 2020, they had a really nice year. In 2021, they're struggling back to 2018 and 2019 and 2017 levels. And even 2014, you're seeing a massive drop, and they're trying to make sense here on it on the right. So the mortgage market and UWM have historically experienced cyclical marginal ranges, but despite the cycles, UWM delivers significant profitability. And they're going on to terms of the average cost per loan. So currently in terms of third quarter 2021, it's a little bit lower than what you had in the first quarter of 2021 and the second quarter of 2021, but still a lot higher than the fourth quarter of 2020. And in terms of the market/channel share, currently they're anticipating that the current levels that they have is a record at 36% market share. Now, in terms of segmentation of customer base, we're able to see as well that seems to be a record. Now we're going to go a little bit critical about this company because I'm trying to give you an unbiased video, even though that I do hold a position with this one. So first one is the third quarter 2021 highlights, and then I'm going to dive towards exact numbers. So first off, they have $329.9 million in the third quarter of 2021 as a net income. So yes, that is a record quarterly total loan volume of $63 billion and purchase volume of around $26.5 billion. Now, when we're going on towards the third quarter financial highlights, so we talked about the origination record. That's a 16% increase of the third quarter of 2020 and a 6% increase from the last quarter. The purchase origination of around $26.5 billion, which is a 119 increase percentage compared to $12.1 billion in the third quarter of 2020, and a 10% increase from $24.1 billion in the second quarter 2021. The total margins of 94 basis points in third quarter 2021 compared to 318 in third quarter 2020 and 81 basis points in second quarter 2021. So this is the critical one. Apparently, they really dove down from the fourth quarter 2020 to what we're seeing right now. So that's a really massive drop in the total margin. I'll basically pick points into what actually caused this massive drop in total margins. But we're able to see that the third quarter of 2021 net income is currently $329.9 million, inclusive of $170.5 million decline in fair value of MSRs as compared to $1.5 billion of net income in the third quarter of 2020, which is inclusive to $68.9 million of expenses related to amortization, impairments, and payoffs of MSRs. And in terms of the second quarter 2021, they had $138.7 million net income, inclusive of a $219 million decline in fair value of MSRs. So the biggest thing that I do want to talk about here is that massive drop year over year from $1.5 billion of net income to around $330 million. So what happened there? Now, if we were to take a look into just the general net income, we're able to see that massive drop. The total margins has actually dropped around 1/3 than what it was a year over year ago. That could explain a major part of this massive drop. And in terms of the cash and cash equivalents, yes, there is an improvement. Total assets seen improvements. Total equity stayed somewhat about the same from last quarter, but seen around a 50% improvement from the year before. But if we were to dive even further into this, we're able to see that there is some changes specifically as well towards the total assets. We see a nice increase, but also in terms of equity, that seems a little bit of increase. In terms of revenues, we're seeing here, and we're going to compare 9 months ending September 30th for 2021 and 2020. And we're able to see that the net income here was double in 2020. So we're going to take it as an average, and then we're going to compare the 3 months ending September 30th. So first off, the total revenue, it was higher in the 9 months ending September 30th, 2020. And the biggest reason is loan servicing income, that was lower, but the loan production income, that was where the focus was. And the biggest part is that the change in fair value of mortgage servicing rights, that really took a massive chunk of that profits, around $448 million. That really dropped basically the profits in the 9 months ending September 30th. So now we know the biggest difference between these two for the total revenue nets. Now, in terms of the net income, the other things are earnings before income tax. They were higher. We already talked about why that is. But in general, almost everything in terms of expenses are on par from what we've seen in the last year. Now, there is around 3 times more marketing, from 14 million to around 37 million. And depreciation and amortization increased, and servicing costs. But all in all, we're seeing that it's on par. Mainly, this was the biggest issue, the change in fair value of mortgage servicing rights, that really took a hit in the 9 months ending September 30th. 3 months ending September 30th, you're able to see that the total revenues there are around 1/3. Biggest point is the loan production loan production income wasn't up to par. We had seen around 1.7 billion drop to around 600 million. And as well, we had the change in fair value of mortgage servicing right, that took a hit. And all these two combined with almost the same amount of expenses really dropped this one to critical levels. And so they really need to fix up their loan production income, or really slash down their expenses. Your expenses shouldn't be on the same level as it was before if you're not making that amount of money. Now, on the last things I do want to talk about here is that they are going to be issuing around 10 cents per share dividend on January 6th. So this here might seem very small compared to the general stock price, but you know, some people enjoy seeing some dividends. The other thing here is Bank of New York Mellon Corp makes around 527,000 investments in UWMC, and I'll show you a bit more about institutional buyers. But there is as well another thing, 750,000 shares of UWMC is acquired by Alberta Investments Management Corp. Now, in terms of the institutional buyers, we see a few activities here. JP Morgan actually liquidated 61% of their shares, Marathon Trading 45%, Sculptor liquidated their entire position, but you're still seeing some additions. Geode Capital increased their position by 57%. Bank of New York Mellon Corp added around 128.61% of their initial position to a total of 143,000 shares. And Meridian Wealth added some. You're able to see Vanguard increase their position. Rumble Advisors 61.27% addition. So there's definitely a lot more interest into this one in terms of institutional buyers than there was a year ago. Now, before moving on forward, if you would like to see more contents like this, make sure to click the subscribe button and leave notifications on for this channel. Don't forget to drop a like, and you can join our Discord if you would like. Now, in terms of the price over book and the price over sales, price over book doesn't really actually count in this one just because of how their operations really work. And a lot of this price over book or quote unquote assets is mainly subsidized by their liabilities as a mortgage wholesale seller, based on my understanding. But the price over sales is around half undervalued, my bad. And the price over earning is around 50 cents. Now, this is based on a yearly value, so if it continues to going on with a decline, these numbers will rise significantly due to sales not being really as good as it was last year. Now, let's move on quickly towards technical analysis and discuss where we think it's going to be going sometime soon. Now, from a technical analysis perspective, we do have a few things I do want to talk about. First off, in terms of the moving averages, yes, the 10 SMA is above 30 EMA, which is a bullish thing, and the price point is above 50 SMA. That's all good and sunshines. We see momentum is a bit positive here, and MACD is really slashing on towards zero. A million %R shows more supply than demand when it comes towards buying and selling. But I do want to move on even further than stochastic fast and stochastic slow, which, by the way, both suggest that we might be testing the next support. The Bollinger Bands here are between 734 and 680, so it's a very tight realm, and the stock is expected to trade between 778 and 636. But mainly, I want to cover the Fibonacci retracement supports and resistances. The first resistance is at 771, then 86.2, and then 935, 1008, and 1112, and the support is around 625. In terms of price line actions, generally you're able to see a very strong support around the 695, and then 672, and then 663 and 642. Resistances 704, 734, around 753, 791, and then going to 835, 884, and then up to 942, and then going to 1012. Now, before moving on to what I think about the stock and what's going to happen next, we have to understand the ratings of the analyst consensus. So first off, they've given it around 2 buys and 2 holds. It's a moderate buy. The average price target for this one is around 788, which suggests around 13% upside, but you're able to see that the price target sits anywhere between $7 and $12 with prominent names like JP Morgan. This person's success rate is around 81% with an average return of 21%, and they reiterated a hold. You're able to see other ones like Brock Van Vliert initiated coverage at a buy of 850. So some of them, a lot of them have a high success rate. I'm seeing this person $9 a buy from JMP Securities. Success rate is 83%. Coming into what I think is going to happen here. So this stock definitely seen a massive beating. I think it topped out around $18 pre-SPAC, and currently the bottom is around $6.25, currently around $7. It is closer to the bottom than it is to the top. I do imagine that this stock, if it does hold well in terms of improving their balance sheets, and I know they are in an expansion phase, that's the biggest reason why their net incomes are dropped significantly, could be mainly towards expenses related towards the expansions, but they really need to meet their expected and forecasted incomes in order to reach at least better quarters than the historical seen ones in terms of net income, not just origination volume. So that's a critical one that they need to be very careful of. Currently speaking, it's a bit disappointing seeing what happened in this quarter, but hopefully they'll be able to pull the gears together. And really what matters is the fourth quarter of 2021, because a lot of these indicators will update based on the yearly perspective on the TTM. So it's very critical. I am moderately cautiously optimistic with this one, but I see where some people would be very shaky in their investments, especially with the trend that is going on in terms of a decline of net profits, and hopefully that sees an improvement. What do you think about this one? Make sure to down in the comments below. Sure, subscribe and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.